4, 3, 2, 1.
Welcome, everybody, to an episode of the Open Forum, tax and legal business and investing questions answered in a fun and interesting format. I've got my co-host today, Winnie Kohler. This is my dog that follows me everywhere around. She is our office therapy dog. So anybody that just got yelled at from Mark Kohler, they go in the corner and pet the dog and cry, and then they come back to work and they're good as new. I'm just joking. I wouldn't yell at anybody. So that's Winnie. She's running around here trying to get on my lap during this entire episode. Now, what we're talking about today is your tax and legal business questions, and I'm a CPA and attorney and want to answer them as distinctly, efficiently, and easily as possible. Please don't go anywhere. Share this with your friends and family. It'll be up on the Entrepreneur Facebook page, the Mark Kohler Facebook page, and on YouTube. You can watch it over and over again. I hope I can share something with you that will help, that will save you thousands and thousands of dollars. So I've already got some questions coming in, and we do this every Thursday at 4 o'clock Mountain. So that's 6 o'clock Eastern. I had to slow down and say that, make sure I got it right. Studio, we doing all right? We're good? Live sound, everything's rocking? Okay, I think we have our first question. We're just going for it, people. This is for you. So this will be down there below in the section so you can see this. What do we got, Jack?
So Tanya from Illinois says, how do I maximize the home office deduction?
Okay, Tanya in Illinois, maximizing home office deduction. First, people, do not listen to your accountant if they say this is a high risk item. Don't try to write off home office, you'll get audited. Bullcrap. I cannot say that enough. You're entitled to the write-off. You should take it. There's been new legislation on this in the last 5 years that makes it even easier and ethically and validly available for you as a small business owner. I'm going to break it down right here on the whiteboard. Do we have our whiteboard up? Can everybody see us? All right. So home office deduction. Whoa, what's up with that? I got this weird little squiggly thing going on here. Okay, home office deduction. Now on this note, home office. Okay, I'll try to do my best writing here for you folks. Home office deduction. I'm going to tell you this. I look for this on every client's tax return. My team is trained to do that. I don't care if you have a rental property, an online business, consulting business, you're a doctor at an office during the day, you are entitled to the home office, and I'll explain why. Now, the first thing you need to know is there's two ways to go after the deduction. The simplified, and then what has been generally known amongst us professionals is the standard. Now, the simplified is just that. It's $5 per square foot, up to 300 square feet, $1,500, done. That's per year. Now, some of you are like, $1,500 bucks. I can write off more per month, can I? Yeah, sure. We'll go over the standard method in a minute. But the simplified method, easy schmeezy, no audit risk, keep it simple, $1,500 bucks. Just be done with it. And the IRS is not going to chase you down for $1,500 write-off unless you've got a bunch of other garbage on your tax return they're coming after you for. And I want you to do it honestly. You got to have that home-based business with income, yada, yada. But this is $5 times 300 and square feet. Okay. Now what's fun here, and I wish we could show the clip without getting into copyright problems, but in the movie The Accountant, Ben Affleck's at the table. This is in the first 15 minutes of the show. And the little farmer couple was there, and they're paying too much in tax. And he asked the wife, where'd you buy that necklace? Don't you like it? And he's like, no. And he goes, do you sell it? She goes, yeah, at the bazaars in the church and da-da-da. And he walks him through it. And the first question he says, where do you make your little necklaces? She sat at the kitchen table, and he explains and takes the simplified write-off right there. He explained the 300 square feet, $5 right there in the movie The Accountant. Kick A movie, by the way. Okay, now that's the simplified method. And you can only take one home office deduction. So if you have a rental property business and then an online business, if you take the $1,500 over here, you can't take it twice. The IRS is like, you only have one home office, $750 here, $750 there. That's cool, but that's it. Okay, now standard, you're going to take the square footage of your whole house. So there's your total square footage. And then you're going to divide out how much square footage is for my home office. So if this is your home office, you do the math and you divide it out and you'd say, okay, 100 square feet, or let's say 200 square feet divided by 2,000 total square feet. And this could be your apartment. It could be a rental. You could own the house, do not care, but you got to find the home office percentage. 200 divided by 2,000, we're going to have a 10% home office percentage. Then you're going to take 10% times your rent, or 10% times your mortgage interest, and 10% times your utilities, HOAs, blah, 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 anything related to your house. Now, you can have, and you're going to get depreciation as well on a per portion of the home. Now, there is what's called recaptures. When you go to sell your house someday, you'd have to recapture this amount of depreciation. But it's an interest-free loan from the IRS. Save taxes now. All right, I'll give the tax back later. I'll use the money, interest-free loan. But that's only on this portion. So don't stress about that. This is a wonderful write-off. So you're going to choose simplified or standard. I'd say about now, 80% of our clients are going simplified because it's easier. There's no depreciation recapture either. Now, here in my book, the Tax and Legal Playbook, Chapter 9 is where I talk about the home office deduction. You can get it on Kindle, pick it up on Amazon Prime, easy schmeezy. I go through 2.5 pages of this. And here's the other quandary. And you tax professionals out there go, Mark, you're oversimplifying. You got to meet 2 tests. It's got to be your regular, and this is right out of the code, regular and exclusive use. If you're going to go in there and return emails in your underwear on Facebook or whatever, that's personal use. So it's not exclusive. You don't get to do it. Hold on. And then the second rule, it has to be your principal place of business. Now, this is why accountants say this is high risk because you'll never qualify. Don't take this. Not Ben Affleck and the accountant. He knows what's going on. You have to meet both of these to get it. Well, a doctor that has an office in town says, well, this isn't my principal place of business, but I come home at night and do work. What the heck? So about 6 years ago, a doctor up in the Northeast took the IRS to court. Said, this is bullcrap. And he goes, I have a doctor's office, so it's not my principal place of business, and I'll return emails or go in and do Facebook late at night or whatever and talk to my kids. But I deserve this write-off. And he went to court, and the judge said, you're right, you do. And if you go home to do office duties in a home office, it's called now the administrative office exception. Now, every one of my clients is doing admin at home for their business. I am, and it's legit. It's honest. You deserve this. Administrative use exception. All right. So don't stress about these 2 things. If your accountant freaks out, send him this YouTube video of mine. Send him a copy of my book for Christmas, Tax and Legal Playbook. I give classes to other accountants on this. I love it. It's a great write-off. Choose the simplified or the standard. Go Ben Affleck. All right. There you go. That's it. All right. Next question. What do we got?
Daniel from Arizona says, when does the sole proprietorship make sense?
Ooh, when does a sole proprietorship make sense? Now, some of you have probably been to a workshop one day and at one time, and they freaked you out and said, you're going to get sued. A sole proprietorship, watch out. Okay. Bullcrap. I think there's some places where the sole proprietorship makes sense. So let's just get our entities on the table. You could be a sole proprietorship. And I'm going to do this quickly. Very simple, very simple. You could be a C Corp. That was all you could do 50 years ago. That was it. Then in the 60s, the IRS and Congress got together and said, well, you could be an S Corp if you had less than 75 shareholders, and the rules have changed since then or whatever. But if you're small, you don't sell stock in Wall Street, you're just a small little Main Street business, which we love right here, you could be an S Corp. Then in the 70s, states started adopting what are called LLCs. All right. So you got these 4 entity choices. Now, as you watch other videos of mine on YouTube or on my website, I have a tax and legal library where I've got 40, 50 videos, 30 hours of content. You can watch them over and over again. It's very affordable, and I update them every year. I've been doing it 10 years. Lifetime access if you get it, a few $100. Check it out. Corey, you'll put the link down there below. So this is So you can study more up on these individual entities. But let's just do pros and cons real quick. A sole prop gives you no asset protection, and ooh, this looks kind of cool. I like how I did that. And then you pay self-employment tax on every dollar of profit. 15.3%. All those that know me, I talk about this all the time. Number one tax saving strategy, save on self-employment tax. Okay, now if I do an LLC, I get asset protection, but still I pay self-employment tax on all the profit, 15.3%. Now, if it's a rental property, it's passive. There's no self-employment tax on that. But any other business in my LLC. Now, the C Corp, I have asset protection, but then I've got to pay corporate tax on the profit. And that sucks. That's 21%. Terrible. Joe Biden wants to increase that for big corporations. Frankly, I don't care. I don't care about big corporations. I care about my Main Street. Okay, so that sucks. The S Corp is the beautiful one because I get asset protection and I can do a split. I can take a W-2, pay my FICA or the F word, self-employment tax, and then everything else, no corporate tax and no self-employment tax. All right. So many of you would say, well, Mark, if I have an operational business, I'm going to want to be an S Corp right out of the gate. And remember, we do the trifecta. I've got my trust. This is just review real quick. Over here's your operations. And then over here, you've got your rentals. And so this is going to be your LLC. And then over here is your operations. And some of you are going to go, well, why would I be a sole proprietor? I'll just be an S Corp because that's the best. Well, it depends. If you're not making enough money, I don't want to run and jump and be an S Corp and have to do a corporate tax return and payroll if there's a cost to set up and maintain this thing. The LLC is a little cheaper, but I still got to pay to set it up and maintain it with the state. So why would I be a sole proprietor? Well, look at these two problems. What are the two problems? And I'm going to put them in red here. The two problems are no asset protection and self-employment tax. Well, if you're just in the startup mode of your little lemonade stand, or you're doing an online business in your basement, and you're just testing product out and you're tracking your expenses, and you're going to make money someday, or maybe you're starting to sell some crap on eBay or Etsy or Craigslist, and there's no liability. You don't have a store. You don't have customers that are walking in. You don't have employees that are working for you. Do you really have much asset protection needs? Unless you're doing a bungee jumping school or a skydiving school, I would say in a little online business in your basement, there's no asset protection concern. All right, what's our second concern? Self-employment tax. Well, until you're making, and I'd say this on a number of videos and in my book, I have a whole chapter on S Corps and LLCs, you're going to jump over to the S Corp when you're making net about 40 grand. Net 40 grand or more. That's when the S Corp makes sense. Now, due to time, I can do what's called an LLC kind of safety net and do an LLC and then go to an S Corp later. You can read about that or watch it on my other LLC videos. But if you're making less than 20 grand or 30 grand and it's in your basement, I'm not going to set up an S Corp because I'm not going to save enough to make sense to do it. So I have a lot of clients that, number one, have no asset protection concern, and number two, they're not making over 20 to 30 grand net. Stay a sole proprietor. When the time comes, we can set up an LLC for the upcoming year, convert to an S Corp later. We can jump up to the S Corp when we need it. And remember, over here on our left side, right side, if I buy a rental property, I'm going to set up an LLC right away. Once I get a rental, I need an LLC. There's no way around that. But in my operations side, I could start out as a sole proprietor and then graduate to an LLC or an S Corp when the time's right. So I think sole proprietorships have a place. There's my answer, and I'm sticking to it. All right. What do we got, Jack? Next question.
Okay, Miguel has got a good one. He says, instead of home office, if you have an S Corp, can you rent back your personal residence to your S Corp?
Okay. Now, Miguel, and this is something I want to clip in, Corey, if you keep this in mind, this little answer is going to go, maybe we should do a separate little clip for this. Okay, we're going to call this, how do I write off home office with an S Corp? This is a good one. How do I write off the home office with an S Corp? Corporations aren't people. Corporations don't have a home. That's why you'll never see a line on a corporate return saying home office. They just don't have a home office. Maybe you say, well, their home office is in Milwaukee. No, that's the corporate office. It's not a home like a residence. So how do we do this? Well, let's do our trifecta. So here's your trust. Here's your 1040. And over here's your LLC for your rentals. And here's your S Corp. I want to do home office. And I do a lot of business out of my home. Now, I'll be blunt. If you're just going to write off the simplified method for $1,500, I'm going to probably write it off over here. Simpler, easier. You took it, you're done. No audit risk. And if you have rental property, just take it over there. Don't even worry about it at the S Corp level. But if Miguel says, where's Miguel from? Did you tell us where he's from? Miguel, we want to know where you're from. He must be from Duluth, Minnesota. So Miguel says, I want to write off the home office in my S Corp, and I'm going to use the standard method. I'm going to write off $400 a month. That's $4,800 a year. That's not chump change. So what we would do is Miguel is over here as a W-2 employee, and he's also a shareholder because he's doing his S Corp the way he should, and he's taking his little salary. Miguel, you know what I'm talking about, right? Well, the S Corp is going to give you another check every month called home office reimbursement. It's not, now we would put it, you're right, Miguel, on the tax return, on the 1120S tax return for the S Corp, I would put it in the box under rent because the corporation is renting it from you. But I don't want it to be rental income where you're going to pay tax. So what accountants will do is say, we're going to calculate what the home office should have been, and that's going to be the reimbursement amount. So it's non-taxable to you. So the corporation gets a write-off. You get this $400 a month, and I'm just using that as an example. I'm not saying that's what it would be in every instance, but we're going to calculate what it would be. Might be $362.50, and you're going to write that off every month as rent in the S Corp and tax-free home office reimbursement to Miguel, the employee. That's how it works. Now, well, if Miguel goes, well, I want the corporation to rent it for $1,000 a month. Oh, okay. Well, now you've got a rental property. So your home that's owned by the trust is now going to rent part of the building to the part of your home to the S Corp. Now you've got a claim on a Schedule E rental income of $1,000. And now you've got to take write-offs for that. I don't want to treat your home as a rental property. So Miguel, don't go there. We don't recommend that to our clients. Just do a home office reimbursement. By the time you jump through the hoops of renting the home from yourself, it's not worth it. Just do the home office reimbursement. So the corporate gets a write-off. You don't pay taxes on it. IRS is not going to audit you for this. And you're going to have work papers that calculate this amount. In my entire office, we're behind this. We understand it. We do trainings on this every year. That's the answer of how to write off home office in an S Corp. Next question.
So Joe from Arizona says, how do you pay employees out of the country, software development company, pay designers, developers, treat them as employees, contractors? Yeah. Okay,
so Joe has workers. That's what we're going to call them, Joe. So you've got your S Corp and you're paying for workers in another country. And the question is, do I W-2 them or do I 1099 them? The short answer, I'm going to presume 99% of the time for my clients, you're just going to 1099 them. And here's why. You don't have an office in India or Mexico. You don't have managers there. You don't pay rent in a building. You don't provide health care or a cafeteria. That's 99% of my small business owners on Main Street. So you're just going to 1099 them. Done. And you get to write it off. There's nothing wrong with that. You just need to get a receipt, show that you paid them, and have a good record of what the freak they did for you. And the IRS isn't going to have a problem with it. I'm okay with that. But if you're Nike and you've got a manufacturing facility in India and you've got all these kids working for you under age 8, oh my gosh, I'm just joking. I shouldn't even say that. I don't want to get in a lawsuit with Nike. I love Nike. That was a joke. They had some bad press 10 years ago. So I won't use that. But I'm a big multinational company with a little manufacturing facility in another country, and I'm hiring adults to work for me. And they're building tennis shoes. Now they're employees because they're under my control, under my roof, with my building in India. So, but that's going to be big corporations. So what was her first name? Joe in Arizona. You're going to 1099 him. That's what 99% of our, Main Street businesses are doing. So you're good to go. You don't even need a W-9 because they're not U.S. citizens. So you don't have to issue them a 1099 because they're not a U.S. citizen. You're not going to get any. They're not in the U.S. So you're going to be fine. Next question.
Yvette from Nashville says, would you suggest obtaining a new EIN if you switch from a sole prop to an LLC, or keeping the EIN and officially notifying the IRS of the amendment?
Okay. And Corey, are they hearing Jack okay on the microphone, or do I have to repeat that? I'm sure you're monitoring that. So, okay. Was that passive aggressive? Since you're monitoring the audio and visual, could you give me a direct and honest answer on that? I'm going to repeat it. Okay. Thank you. Poor Corey. I beat him up today. Too many little things. He's a smart guy though. College graduate. Love this guy. All right. Now, repeating the question, a vet in Nashville, Tennessee says, what is it about again?
Would you suggest obtaining an
EIN? Okay, she has a sole prop. You just said EIN. I just need a trigger. Trauma victim here. I just needed a trigger. Okay. She said, I've got a sole proprietorship and I'm going to go to an LLC. Probably in the long run, she's going to ultimately going to be an S Corp. So she's going, I'm a sole prop. I have a bank account and I have an EIN. And she goes, would you recommend getting an EIN for my new LLC? And just or can I just keep the same EIN and let the IRS know? Yvette, you can't do that, even if you wanted to do that. The IRS rules are when you set up an LLC or you set up a sole proprietorship, you have to get a new EIN. Now, I may get some hate mail on that. I know you've got to do that with an incorporation. And I would recommend you do it anyway, Yvette, because if you ever make an S election, you're going to have to do it again if you don't do it now. Let me repeat that. When you're an LLC and you make an S election, you don't have to get a new EIN. But if you're a sole prop, you do have to get it when you get an incorporation. And my understanding is if you go to an LLC, you're going to get an EIN. And I would just do it. Rip the Band-Aid off, be done with it. You can start building your corporate credit. You can start with more legitimacy as an LLC and a new EIN. And that's what we do for all of our clients around the country and have been doing that for 20 years. So that's our standard operating procedure, SOP. And I would recommend you get a new EIN. Don't try to make it work, Yvette. The IRS is not that, I don't want to say the IRS is not that smart. Yeah, I'm going to say the IRS is not that smart. There's a lot of smart people working at the IRS, but the institution of the IRS, they're not, it's too big. It's too hard to let them know, oh, I'm a sole prop, but I'm keeping my EIN, but I'm now in LLC. And right, Yvette? They're going to get that with a letter from you. Don't trust them. All right, next question.
Okay, this is Karen. She says, if you have an...
Where's Karen from?
Doesn't say.
Damn it, Karen. You got to tell us where you're from. Karen from Duluth, Minnesota says...
If you have an S Corp and are purchasing a rental property, should you set up an LLC for the property?
Oh, good. And Corey, is sound okay now with Jack? Okay. So Karen's got an S Corp, and she's going to go buy a cute little rental. Karen, look at the screen for a moment. Notice this little line? That line's there for a reason. It means we don't cross the line. Well, you could use that in a lot of different examples. But, bring it down like this. Like that. More, right there. That's what they can see. All right. So here's your trust, and your trust owns your S Corp. And she's going to buy a rental property. Karen, we don't cross the line. Your rental property over here, if you have your S Corp own it, in fact, I'm working on an article. Why never put property in an S Corp? It's bad. 2 or 3 reasons. Be on the lookout for my article. And it's a pain. For tax purposes, you don't want to do it. And when we bump into clients that have done so, as soon as they sell it, we take the money and never do it again, or we try to get the rental out of there. It's a long conversation. 1031s are a pain. You've got built-in gains. You've got basis issues. You've got depreciation, pass-through loss problems. It complicates the tax return. It's just a mess. And let's say I don't know what, Karen, your business is. Maybe you do screen printing and you've got 3 or 4 employees and you go to events and you sell t-shirts at farmer market. If you have a lawsuit here in your S Corp, they can get at anything in the S Corp. I want your S Corp to be a shell. Do you know the only thing my S Corp owns is my laptop? Sue me. You can have it. Done. That's it. My S Corp doesn't own anything. So I want this wall. So Karen, I hate to say it, and you're probably in California and you hate the $100. Did she say that?
She's in Idaho.
Oh, she's in Idaho.
Yeah.
Oh, Karen, slam dunk. Boom. You're going to go get an LLC in Idaho and put the rental in it. Done. Easy schmeezy. Asset protection. This is a bucket. This is a bucket. Keep a wall between the two. Done. Boom, bada bang. Next question.
Okay. Aaron from Fort Lauderdale, Florida says, if I'm going to be a real estate agent, what entity should I set up?
Okay. Aaron is going to be a real estate agent. Which entity? Now, I hope my daughter, Sydney, who the other day, my daughter who's living in Southern California, as a realtor, brand new realtor, taking a test in an adjacent state as well right now. She's going to be licensed in 2 states. The other day she called me. She goes, Dad, I can't remember, Jack, what the question was. She's like, Dad, what should I do about this? Can I write this off? And I go, I covered this on the open forum last week. And she's like, are you going to make me feel dumb? I go, did you listen to the open forum? No. Why am I going to help you here when you don't even watch my open forum? This is my daughter. So she got in trouble. I still answered her question. Oh, she was mad at me. But anyway, I love my kids, but I'm trying to get them to watch this stuff. So Corey's paying attention too, because he knows not to ask me questions that were on the show. So I love him. Okay. Realtor, Sydney, my daughter, I'll tell you what she did. We started out as an LLC. Now here's why. This is really important, Karen, because no, this isn't Karen. Who's this?
This is Aaron.
Aaron. Is it a female Aaron or male Aaron? Can we tell? Aaron. You never know with Aaron. It's kind of an anonymous name. Okay, so Aaron, female in Fort Lauderdale, says, I'm going to be a realtor. Aaron, I did an LLC for Sydney because she's not going to make enough money in her first year to justify an S Corp. But let's say she hits the mother load. She gets 2 or 3 good listings. She makes extra money. I can't go back in time and make it an S Corp unless she has an LLC. Okay, everybody pay attention. There's 3 reasons why I like LLCs. LLCs for partners, and LLCs for rentals. That's 1, 2, and number 3, I like the LLCs as S Corp insurance. Because this little LLC now set up, let's say it's 1/1/20, you set it up at the beginning of the year, and halfway through the year, you go, ooh, I'm making enough money to be an S Corp. Oh, I didn't set up my S Corp. I'm screwed. Nope, because you're an LLC. I can backdate it into an S Corp with that special election. So now I'm an S Corp all year long, and I can get my tax savings in the first year. I'm going to still have to issue a little W-2 and follow all the rules, but this is a big deal. And so I wanted Sydney to be an LLC. Well, let's say Aaron says, I didn't set up my LLC earlier in the year, so I'm right here. I'm going to be a sole proprietorship for this whole part of the year. Maybe I should be an S Corp now. Now, what I would do, Aaron, and Florida is a good state for this. I'd set up your LLC now. So you've got your LLC done, it's over with, and you turn the corner into 1/1/21 as an, oh, can they see that better, Corey, now? Okay, 1/1/21 as an LLC. So we don't do the S Corp now. We're an LLC for the last part of 2020. And then Erin proceeds into 2021. And we see what happens. If Erin has a good year but doesn't break 40,000 net, she just stays in LLC. If she freaking knocks it out of the park and makes 50 grand or more net, then I can backdate it into an S Corp 1/1/21. So that's what's nice about an LLC, Erin. You've got the legitimacy of an LLC name behind you, some asset protection for showing properties, someone gets hurt, whatever. And you've got your EIN, and you can backdate into an S Corp if you need to. Even start building a little corporate credit. So do the LLC, get to work, and backdate into an S Corp when you need it. Call me. All right, next question.
Okay, Tiago from Oceanside says, I'm thinking about setting up an S Corp. I have some other businesses that are somewhat related, and I want them to have their own name. Can they be under the same S Corp?
Oh, I love it. And Tiago, he's so brash and bold. He's like, I'm from Oceanside. Now, because he's from California, he thinks there may not be any other Oceanside in the world, like Oceanside, New York, or Oceanside, Texas. Just pointing that out. I know how cool it is to live in Oceanside, California, a little above San Diego, beautiful area. All right, so he's in Oceanside, California, and we've got our left side, right side. We've got our trust down here, whether you're married or single. Asset side, we're not worried about it. He said, I've got an S Corp, but I've got 3 or 4 different businesses. Do I really have to set up 3 or 4 S Corps? No. Do you have to set up more LLCs? No. What I would do, did Tiago, is Tiago? Is that what is his name?
I think so, yeah.
Okay, Tiago Enterprises. Just give it a generic name. Enterprises, Inc. There you go. Do you know what the name of my corporation is? Mark J Kohler, Inc. That's it. I bet you it's Dave Ramsey, Inc. Whatever. That's your S Corp. Then you can set up a URL, Tiago Dry Cleaning. You can set up a DBA, Tiago Landscaping. You can set up another URL. Do you know I probably own 20 or 30 URLs on GoDaddy, and I've got maybe 2 or 3 DBAs? So that's how you have the different names for your businesses, but they all flow into one S Corp. Now, are all those businesses in one big bucket? They are. And we talked about that earlier. You might want to set up an LLC here for a partnership with someone. You might set up an LLC here because there's some liability exposure. I don't know, but we can cross that bridge when we come to it. But Tiago, you have one corporation, Tiago Enterprises, Inc. If you call my office, you get an hour with the tax lawyer, just like me, on the phone with you, designing it the way you want, $800 plus the filing fee. And if you need us to be a registered agent or a mailbox for you or a mail forwarding, we can do that. But that's very affordable. We also have our paralegal service of $400, $450 anywhere in the country. Set up an LLC or an S Corp. You don't get the hour with the attorney, but you get it done right with all the pieces and parts. So Tiago, give us a call. We'd love to be of service. I'll throw that out there for anybody that needs an entity. Just go to kkOSlawyers.com. I wish I could just say, oh, and you'll get a discount if you say the word tax. No, we don't do that. And because we're trying to be so affordable already. I'm serious. I have people come to my office that are like, I paid $2,000 for a new LLC. What do I do next? They didn't get any answers with that. It's terrible. And then people that go to some online website and pay $100 and think they're done. Nope, you got to get all the pieces and parts. So we try to keep it affordable. We have a low margin on it. No discount if you call per se, but you're going to get competitive prices with real tax lawyers on the phone with you figuring it out. Sorry, I'm not trying to be salesy here, but I just want you to know what's out there so you can make a good decision. Don't use us. I don't care. All right. Next question.
Tell people to ask more questions.
Oh, okay. Hey, we need some more questions here. We got a bunch in the pipe. Jack's thinking we can do some more. So for those watching right now, I'm here for you. You don't have to make an extra appointment or whatever. Now, one of the questions that we had earlier that I wanted to cover, and this was with, a client that was just here in the office this morning. Is it okay? I know you got one for me, but I'm going to just throw this out. We had a client stop by and say, hey, I'm taking the family on a trip. Can I write off the travel for my family in my business? Great question. The answer is maybe, because I'm going to ask first, what's the trip about? How old is the family? And how many of the kids are there, and spouse, married, whatever. So let's go through a couple examples. So let's say what I love is I want all my clients buying a rental property every year somewhere in the country or the world. And let's say they have a little rental property by grandma. And they're going to go visit this rental. And grandma lives in Phoenix, Arizona. And they have a rental down the street, maybe over in Mesa or Glendale. So they have an LLC in Arizona. And they pack up the kids, fly, drive, I do not care, and they take the family to Arizona to go work on the rental. Now, let's say you're married and you've got a couple teenagers, and you really go check on the rental. Maybe do a little yard work. Maybe you paint the garage door. You go check on it. Very doable. I've taken my kids on trips and we've worked on rental properties. Make the trip miserable for them. I mean, why not? They deserve that work. It's good for them. But seriously, have a family excursion and teach them about rental properties. My kids are all right now trying to buy rentals, and they're having a great, I'm going to just say this. One of my kids and their spouse yesterday went into the bank and got pre-approved to go buy a piece of real estate. They're so excited. They're on Zillow now looking all night. And I'm like, that's awesome. How many of us wish our parents would have taught us that, right? So rental property experience, taking the family. Now, if you have a 2-year-old and you're taking 9 kids on a trip to go check on one rental and you don't even do any work on the rental, no, you can't write that off. So whatever. Now, if you've got an S Corp, you're doing a board meeting for a day and you travel to Jackson Hole, Wyoming, and you have a board meeting, you do some corporate training, you're in, you're out. Yeah, I'll write off the airfare or one day or 2 nights of hotel or something, but I'm not going to write off 10 days in the Cayman Islands. And so the older your kids are, the more involved in the business. Maybe you go to a workshop, you go visit with some clients, you deliver some product. So again, the more activity you can show on the trip and the more the involved your spouse or the kids are, the more I'm writing off. That makes sense, right? But if your account says, no, you can't do that, or you don't track anything, that's not the way to do it. This is your ship. Be the captain and take advantage of that write-off. All right, next question.
Okay, Brandon says, what is the best asset protection against divorce?
Oh, my word. I'm going to repeat that one just so I can gather my thoughts. Brandon says, what's the best asset protection when divorce is imminent? 2 words, prenup. And Brandon wouldn't be asking that if he had done a prenuptial agreement. Well, maybe he is. Maybe he's thinking of getting married. So let's go there first. Your first best asset protection move from a possible divorce is before you get married. And you know, there's a lot of wisdom to that. The best asset protection from a car accident is doing asset protection before you get in the car. Because once you have the accident, you can't move assets around. That's a fraudulent transfer, and a judge will undo anything you do. It's not fair. You run over one of my kids and then start moving all your properties, I'm going to go after it. And that's fair. Same for me. I can't run over one of your kids and start moving assets around. That's fraudulent. I would be in big trouble for that. So you want to do your asset protection before the car accident, before the partnership dispute, before the sexual harassment. Did I say that? So just same point here. If you're going to get married, talk about a prenuptial agreement. It's touchy drafting these things. I'll write up the prenuptial agreement and then they'll go into the conference room and I'll shove it under the door. And I hear, I thought you loved me. Oh, and then things are hitting the wall, all hell's breaking loose. And that maybe was his voice, not hers. But anyway, the point is, prenuptials can be touchy. You got to tell this person you love that you want to put your assets somewhere. They're going to put their assets somewhere. And if there's a divorce, you get to keep them separate. Tiger Woods did this with Alana. How do you say her name? I can't ever pronounce her name, but Tiger Woods did a prenup. And then if you remember, he kind of cheated on her. And he said, please, I want to save the marriage. That was his goal. And she said, okay. then you got to take some strings off that prenup, and they renegotiated. I watched the news. I wanted to say Dateline, TMZ. I watched TMZ, the news, to get my information. So you might want to follow up on some of that. But the point is, a prenup is your best move. Now, if you're already married and you're thinking of getting divorced, you can't move assets around and hide assets. You get in big trouble, and it's not the right thing to do. Anyway, you can talk about a post-nuptial agreement. That's A-Rod and Madonna did a post-nup, which says, hey, let's divide this stuff up, and if we get divorced, at least this part's taken care of. And a lot of people fight over finances. I've had clients say, hey, my business is starting to take off and my marriage is on the rocks. I'm going to get divorced. And I say, whoa, don't get divorced. Just go say, hey, let's do a post-nup. This business is going to go somewhere. I don't want to stay married if I'm going to do all this work and this husband or this wife's going to get a piece of that. So let's do a post-nup and let's work things out, but we're going to divide up the assets now. And if the other spouse says, let's just get a divorce, fine. But you can take money off the table with a post-nuptial agreement. Anyway, I'm rambling too much, but my heart goes out to you. Divorce is so hard. And but I caution you, don't try to hide assets. Start a dialogue. Do mediation. Can I just say that to everybody out there? Anybody that's been through a divorce with lawyers, you want to kill people when you're done with this, including your lawyer and your spouse's lawyer. It's no fun. Try to sit down calmly, put all the assets on the table, have a mediator meet with you, and divide it up and write it up. You start yelling and fighting and hiring lawyers, you're going to spend thousands and thousands, if not sometimes over $100,000 or more in the fight. And the lawyers are the only ones that win. Try to get to a table with a mediator. All right. One more question. We'll call it a day.
Yep.
All right.
Okay. Jonathan from Maui says, I have an LLC as a handyman in Maui, my only income. What's the best way to buy a house to get pre-approved for a loan if it's less than 2 years old? His business is less than 2 years old.
Ooh, you might have some answers for this, Jack, right? Jack just dealt with this with a banker. So he's a handyman in Maui, LLC. Did he say single or married? Did he tell us that?
Didn't say.
Okay. Being married is going to help you because now you got 2 credit scores to play with. So Jonathan, if you're single, a lot of times it's going to be a different answer than if you're married, because now we got 2 social security numbers, 2 FICO scores, and you might get a little more love at the bank. Now, we all know Bank of Hawaii pretty much dominates Hawaii, and you don't see a Wells Fargo on every corner in Hawaii. It's kind of unique that way. So you're going to go into Bank of Hawaii and say, here's my tax return for the last 2 years. And they go, oh, you haven't got consistent income for 2 years. You're an LLC. You don't have a W-2 coming off your S Corp. They see you as a wild card. And so the bank's not going to be real anxious to wheel and deal with you to go buy your own home over here. Now, I've got a couple other ideas, but I'm going to ask Jack here. They can hear you on the mic. Jack, what would you say as you met with some bankers on this? Is there anything you'd recommend?
I think the best thing to do is just go and talk with a banker and get their opinion because they're going to know best. And secondly, having some money for a down payment gives you a huge advantage. If you don't have 5% to put down, you're not going to get approved for a loan. Anyway. And the more that you have to put down, like if you have 20% down and you're self-employed, a bank will be way more willing to work with you. That's kind of my experience.
Yeah, and I like what Jack said there too, and I'm going to say it another way. You don't know what you don't know. Don't presume the banker's going to shoot you down. Now you may say, well, Mark, I already went and they shot me down. Okay. But bankers want to give you a loan. They make money if they can get you a loan. And if the banker's a butthead and you didn't hit it off with them, go down the street to another loan officer. You can do that. Shop around. Go to another bank and say, Bank of Hawaii screwed me over. And you go to the Hawaii State Bank and go, can you help me out? And they may go, we would love to. They want to get your business. So shop around, talk to different loan officers, and find out what the other options are. Don't presume. That's another way of what Jack's saying. Number 2, get a cosigner. You might be able to just get a cosigner. If you've got the down payment and you've got the business and you're making money, Go to mom, dad, grandma, aunt, uncle. You're in Hawaii, bud. Go see the fam. Go see the uncle, you know. It's a family affair over here. It's the Ohana. Go to the Ohana and say, hey, someone help me out here. And I think a cosigner is a fair option, and that could expedite the process. Number 2, do a seller carryback. Maybe you go to the seller and start shopping and ask someone to carry the note for you. And 1 out of 30 homes might do it. You never know. Just start knocking on doors. We get into this mindset that the only way to buy a home is call the realtor, walk around, make an offer, have 10% in the bank, and I'm going to fit this little Fannie Mae, Freddie Mac model. No. Go out there and knock on a door of someone that's in foreclosure and say, hey, if I bring this current, will you sell me the house? And use a land trust, assume their mortgage. And that's called a subject to. So you could do a subject to. And that's an option. So I'm going to put subject to, seller carryback, a cosigner. Get creative. There's nothing wrong with that. Maybe find an investor partner to go with you. Say, let's buy this. I'll rent it. But after 2 years, I get to buy it back at the original price. And you get to keep this. So you could do some sort of creative partnership acquisition. Another thing that you might want to do is a lease option. You got the house you want. Go to the seller and say, hey, I can't qualify right now, but I'll lease it with an option to buy it. I'll give you a non-refundable option fee, but you promise to sell it to me in the next 2 years for this price. And they're like, okay. And you may even increase the price a little bit so they're willing to do it. And they keep making their mortgage payment. You pay their rent so they can cover the mortgage. And then you go to the bank and go, hey, I got to get qualified in the next 24 months. And they go, okay, we can work with that. And so now you're in the house you want to be in. You fix it up. You're a tenant, but you've got that option agreement that you can exercise at any time. And the seller's going to have to sell it to you and honor that option agreement. Meanwhile, you're fixing your credit. You're talking to the banker, and you get the house of your dreams. So that's the creative side of things, and it's okay. You don't have to be that perfect model Freddie Mac client to pull this off. Anything else you'd say? Jack endorses my comment. So we're good. Corey, my studio producer, is there anything I need to improve on? Are we good here?
We're good.
Call me out.
You're wonderful.
Anything you want to say passive aggressively, like, Mark, it would be nice if you combed your hair next time. Anything like that? I'm trying to grow my hair out, so.
Maybe shave.
Oh, okay, fair. I did not shave today. I was going for more of a kind of a rustic, more manly look. It turned into something more of a Joe Dirt, kind of a trailer trash look. I'm going to go to Waffle House after and just hang out with the trailer trash. I love Waffle House. I'm a big fan. Okay, everybody, keep living the dream. I'll be back here next Thursday answering your tax and legal questions. Please get in there, pick up a copy of my book at Amazon, Tax and Legal Playbook. Next week on Friday and Saturday, I'm doing my 2-day workshop. Basics on Friday, advanced on Saturday, $200-300. It's limited to only 30 people on the Zoom call. Lots of Q&A. It's going to be a wonderful event, and you can get to that also on my website at markjkohler.com.
What was that called?
It is called my Fall Business Owner Workshop, Friday and Saturday next week, and get to markjkohler.com to sign up. It's limited to 30 people each day. Once it's sold out, it's sold out. So it's very intimate, where I'm going to be there to answer your questions throughout the day with these 29 other people with you, and I think you're going to love it. Anything else I should say on that? We need to make sure that that's the banner on my website up in front and center so everybody can find it easily. But just go to the pull-down menu for workshops, Business Owner Workshop. Thanks, everybody, and I'll see you next